Hi there, I'm Dean Heskin. Thank you for tuning in to our most recent episode here of our podcast, The Secret War on Cash, where we discuss the changing markets, the changing economy, sometimes good, sometimes bad. Recently, unfortunately, seems like a lot more bad brewing out there than good. However, today we're going to be discussing something that I think we could look at as a very positive thing and perhaps the high note of 2024, at least if many of these experts out there are correct. And I have my co-host with me, Chris Agelastos. Chris, how are you today?
I'm doing well, thank you.
Very good to hear. Well, as I just mentioned in the intro, oftentimes on our podcast, because we're talking about the markets, the economy, it seems like there's been more bad than good. But today we're going to actually hit on something that I think is really could be of one of the biggest positives that we've seen in quite some time. And that's the
Yeah.
gold market. The
hmm
gold market has been, well, it's been hot. I would say red hot, but it's, let's say, white hot. That's super, super hot. After 2 years of trading in basically a 20% range between 1,600 and about $2,000 an ounce, gold finally broke out to the upside, closing at an all-time high of $2,126 per ounce on March 4th. So this has been probably one of the best moves that we've seen in quite some time, and I'd like to say that it was something. It was surprising to see it do that, but it really wasn't surprising per se, given some of the forecasts or projections that came out throughout the remainder of 2023 towards the end of the year there. But I will say, personally speaking, I found it somewhat surprising that it made the type of move it did without a lot of happenings or going ons in the
hmm
economy. There really wasn't like a ginormous catalyst that caused this to occur. And what this is now bringing into the discussion again is what many of these analysts or experts were talking about at the end of last year: gold prices hitting 3,000 an ounce. In fact, maybe even as high as 3,200 an ounce. And
hmm
the article that's on your screen now, you'll see they're saying potentially even higher than that, much higher, as high as
Yeah.
15,000 an ounce, which
Yep.
seems crazy. Now, many people that we talk to at Swiss America, or that I've talked to over the years, they gold has been kind of a new thing for them, and a lot of people, who maybe
Sure.
even those tuning in, this is not something they ventured into, and it would be a whole new thing for them to get involved in it as well. And what many people might not be aware of, Chris, in the last 12 years, going back to 2011,
hmm
gold's up like 670%.
Yeah.
That's huge,
Yep. Yep.
670%. So this move that we're seeing now in gold do you think this breakout that they're talking about, it's actually here?
Yeah, I think, well, number one, we've sort of been expecting something the last couple of years, really, right? I mean, I feel like, hitting 21, 2,200 a year or so ago, we were right on the cusp and could and should have hit it. So it's really not that shocking to us. Another thing that he points out here, because I have had clients say, well, now gold's at an all-time high. Is now really the time to be buying? You're supposed to buy low, sell high, et cetera. But what he points out in here that really, when you adjust for inflation, an all-time high would be near that $3,200 mark. So we're still well under an all-time high when you take into account inflation, which I think obviously you have to do with everything. So there is a lot of strong demand pushing for it. He makes a great case in here that $15,000 gold, as ridiculous as that number sounds, I mean, even me saying it, would be right in line with the last two gold markets that we saw, the big spikes, 70, I think it was 71 to 80, and then 99 to 2011. And now, this current one started in 2015. So if we see the same type of moves that we saw back then, $15,000 an ounce gold is not outside of the realm of possibility. So I think, you and I tend to be more conservative. Let's say he's off by half and it's 7,500. That's still a lot of room for gold to go. So I think that's part of the excitement that, we're hearing anyway, from client calls and whatnot.
Well, and it's funny because It does seem outrageously high. Even
Right.
3,000 seems high. Certainly $15,000 an ounce seems high.
Yeah.
But as you were talking there, I was thinking to myself, I remember when Bitcoin was $1,000,
Yeah.
and look at it today. You
Right.
look at the stock indexes. I remember when
Mhm.
the Dow finally hit 10,000
That
in
was a
there.
big deal. That's right. Yep.
Huge deal, huge
Hmm.
deal. And
Yeah.
so, it really begs the question, or it makes you kind of pause and ask, why couldn't and what would stop gold? Something that
Yeah.
does have, relatively speaking, a finite supply,
Yeah.
and with any kind of increase in demand, what would stop it from hitting prices as high as that 3,000, that 10,000, that $15,000
Yeah.
an ounce? Now, many people tuning in, as I mentioned a moment ago, they may not be familiar with what type of gold to buy, what type of silver.
Hmm.
And on your screen now, you'll see, or on the link for those of you who are listening, from Swiss America's website, there is a complete listing of the various type of items or areas of the marketplace that you can get into. So you see listed platinum, gold, or silver bullion coins, generic numismatic coins, as it's referred to, rare coins. You can get into precious metal IRAs. I mean, Chris, there really seems to be a lot of options. Is there one better option for everyone, or how would you explain this to a person who is maybe thinking about getting into the market for the first time?
Yeah. So a lot of people that contact us, this is maybe their first time. They're kind of looking into it, and so they're really looking for some guidance. So, typically speaking, what we do is try to find out what some of their concerns are. What they're trying to accomplish, right? What are they concerned about? How long do they plan on staying in the market? Is this something that they're just doing for the next few years to see how it goes? Or are they doing more long-term planning, retirement planning, maybe 10, 15, 20 years out? Or even a lot of people, a lot of times, they want to set aside some money in gold, and they really hope they never have to use it. So many of my clients say, look, I'm just going to put it there as my safety net. If I need it, great, it's there. If I don't, I'll leave it for the kids and hand it down to them. So that's why we carry a variety of products, and on the site, I mean, there are so many different products. We don't list everything on there, but it gives you an idea of the different categories, and that's really what our staff here will do, is just help you to pick the product that's appropriate for your situation. At the end of the day, it's all either gold or silver, right? But there are little differences that we can help you navigate so that you don't feel like, you're just jumping into something and winging it. We prefer to, help you make a plan so that you feel good about what you're doing.
Yeah, and I think that's what's key is, getting into the marketplace. I believe for anyone to be properly diversified, they should have some physical metal, some gold, some
Yeah.
silver, etc. But none of that should happen before there at least is a good knowledge base or a foundation that's been established. Which, for over 40 years now, it's you and I both know. But for those of you tuning in, that's one of the things that Swiss America, it makes us stand out from literally all the other firms out there. One part
Yeah.
being we're one of the few who's been around for over 40 years, but the other
Right.
thing where the approach is one of educating first, helping develop or gain that understanding first, and then upon that, getting a person involved in the market. And on that note, this next part on your screen, you'll see so the frequently asked questions about precious metals and gold IRAs. And I
Mhm.
know that, oftentimes when people are contacting the firm and talking about their investments, it never really even dawned on them that they could actually own physical metal, the actual physical
Yeah.
metal with their retirement account. And you'll see
Mhm.
the categories listed there: the traditional IRA, the Roth IRA, some 401k or other employer sponsored plans. Tell us a little bit more about that process, Chris. Like what's involved, for a person, or what steps do they need to do to kind of make that move or transition into physical metal from some of their retirement accounts?
It's actually surprisingly easy, and you're right. A lot of people just don't even think about purchasing gold using their retirement plan. They don't. Our retirement plans are money that aren't for now, right? It's money that we're setting aside for the future, and so a lot of times they just don't even consider that they could do that. And so it is very easy. the government, thankfully, one of the good things they've done, I know we bash on them a little bit here from time to time, but one of the good things they did is put together this self-directed IRA program so that people can purchase physical gold and silver with their IRAs, 401ks, 403bs. And for most people, it probably is about 10 to 15 minutes worth of conversation and a little bit of paperwork that we assist with, so that they're essentially just signing a few things to open up a new account. We help them transfer the funds from their current retirement plan. Let's say that they're over at Fidelity or Schwab or somebody like that, and they want to purchase physical metal. We help them transfer the funds so that there's no tax problem. It's all done properly, so that they don't have any concerns. And once that money arrives in their new precious metals IRA account, we can help them pick out their metal and make their purchase so that they can actually hold physical metal. And that's the other thing. People, think, oh, is that like a gold fund or a mining share, or what is that? No, you are actually buying physical gold and silver. So whether it's, bars, or I would say coins are probably by far the most common item purchased in retirement plans, but you can safeguard some of that retirement money, allow it to continue to grow tax deferred, which is great, and feel a little bit better. I think most of the people I'm talking to, they just want to sleep better at night, knowing that no matter what happens in the banking system, they have something real that is sitting in their retirement plan, protecting them, kind of against the unknown, unfortunately.
Well, and to be clear, they do own the physical gold. However, it is held in trust at a depository, because that's a question that, what do I do with it? Where do I keep it? It is held in a state of the art facility. It has never been even a remote incident in terms of loss, theft, or anything of that sort. And to be clear, if and when at whatever point or time a person wants to actually hold that metal, it's very simple to execute a transaction in order to get that metal either sent to them and or liquidated for them. And the only thing, it just like any other retirement account or their current retirement account they have, anytime you're pulling money out, it would just be treated as a distribution at that point, and the applicable tax and penalties might occur. So, well, Chris, thank you for all that. And for those tuning in, if you'd like to learn more about how to get into physical metal, how to put your retirement account into physical metal, please contact our office at 800-289-2646 or visit us online at www.swissamerica.com. Thanks so much, Chris. We will look forward to talking about this move in metals, especially if it goes to that $3,000 or $3,200 an ounce, $15,000 an ounce. We might be talking about gold a lot. So I really hope that we do see a lot of improvement in our economy, but by the same token, it seems like the more this unraveling is occurring, that's kind of been a major catalyst for what's caused the price of gold to move up, which we talked about a moment ago. In the last 11 years, up 670%, and that might even be small depending on what we see here in the next few years. So if you're not tuned in, or subscribing to this podcast, please do so. We look forward to talking about this and other issues with you more in the future over the course of the next year. And follow us on social media if you're not doing that as well. We look forward to staying in touch with you. Thank you. Have a great day.